What is going on, YouTube family? Welcome back to another episode of NAS100 analysis today. And normally I would say we're going to be picking up from where we left off, but obviously that was about 2 weeks ago. Last video I did was on Sunday the 23rd. Okay, so that's roughly about 2 weeks ago. So all the situations have been taking place in this whole area over here. I did not record anything, so I was unable to share anything with you. But as you can see by what's been going on the charts, is that we have actively been taking positions in the market. We've won most, we've lost a few, but we've won way more than I would have lost, right? There was a few areas where a few mistakes were made here and there, but however, bottom line is it was a good 2 weeks. Not gonna lie, it was a good 2 weeks. Hopefully I'll be replicating that situation moving forward. Actually, hopefully is a terrible word to use. I will be replicating the successes of last week, especially all the mistakes that I made, how I can improve it, because that's the overall journey of learning how to obviously master the markets is self-accountability, knowing that where you make mistakes and knowing how to fix the mistakes. But the most important thing of all is knowing how you made a mistake to begin with, right? Because if you are in the market and you make a mistake and you don't know how that mistake came about, so for example, a typical way of saying you don't know how the mistake came about is when you turn around and you start blaming your broker. Oh, the broker, they moved this. No, it's got nothing to do with that, right? The question is, few things would have happened that you would have seen or not seen. It happens to us all, okay? And sometimes it can take us out of a situation, right? So with all of that covered, oh, by the way, you will find the content today super useful, so make sure you hit the subscribe button, turn on the notification, and drop us a like. So so for this situation right here, okay, because I navigated the market in a particular kind of way that actually helped me make sure that I didn't screw anything up, right? And I'm going to explain that reasoning to you, and hopefully you're going to be able to see it. And in between all of that, mistakes did get made, right? So I did take losses, so it wasn't just a straightforward perfect trading. We did take L's, but ultimately the profits outweighed the L's that we took last week, right? Last week and the previous week, because it was pretty much the same situation over again, right? So first things first is on Sunday, the last video that I did, okay, we identified this area over here as that being the high of the week. Now this was a super powerful indicator that I used throughout last week and this week to help me make sure that I didn't screw anything up, right? And I'm going to explain that to you. So Monday, price was down here somewhere. So price came down here somewhere, right? So price was over here somewhere, right, on Monday, right? And I saw it. And basically what I did was I put a little level over here, right? So I put a little level over here. It didn't obviously transcribe itself onto this particular chart because that's the one on my phone, and sometimes when you do the global sync magic, it doesn't always transcend onto this chart, and then you come back onto this chart and then there's lines all over the place. So what I tend to do is I just don't save it to go across, but there are even more scribbles on the charts on my phone. Literally there's way more scribbles on the chart on my phone, but this one that we got here is absolutely cool. So I drew a little level. Let me just make sure this is clear, because it sounds like I'm a little bit rambling, right? So let me just bring a little bit of organization to it. So I drew a level across this area over here, right here, okay? So when I saw that price was dancing in between this zone, right, I got a little bit scared, and this is where I made my first mistake. So my first mistake was made at this location, and I put in a sell, and it naturally went up. So it went up and it didn't hit my stop, but it went up high enough, right? So this over here was a lucky escape for me, no lie, lucky escape, right? So the following day, the Wednesday, price came down to this bottom right here, and there I stuck in the trading stop, and then I was shaking out by one of these wicks over here. One of these wicks basically took me out, right? I then drew another level up here. Because that was the high for the week at that moment. So I was like, if it breaks that level, then literally I need to maybe consider taking in a buy. So it broke that level, right? And this was where the first big mistake was made, the first big one, right? So it broke that level, and when it did, I ended up taking this area over here as a buy, right? So for about an hour, I was very profitable. And then after that, this is what happened. It came all the way down and shook me out, literally took me out, right? Because where I had my stop, I kept my stop tight because I didn't want to lose some of the gains that I made in this area over here, okay? So I kept it tight, and I was, what's the word I'm looking for? I was confident that it was going to keep going up. Now, the first problem with my analysis was I completely forgot about this one over here, even though I had marked it out clearly, right? That this was not going to be an uptrend unless this level here was breached, because that was the previous week's high. So me taking a buy at this location was super stupid, but I did it anyways, right? I did it anyways because I'm only human, right? So I took the buy, it went up, and then it shook me out, right? And then it came down to this level, and at this point right now, I've already taken an L, a decent sized L anyways. It wasn't big enough to wipe me out, but it was pretty much more or less near break even, right? So we hadn't really done that well for the week. So I saw price fly all the way down, and price came back down to this level. Now at this point in time, I had my thinking cap on. I was literally thinking, I was using my head, right? I hadn't been using it properly for the week, but I've been using my head. So I noticed that it bounced off this support level over here, right? It's not a major one, but it bounced off it. So once it bounced off that, okay, right, I waited until the following day. So this was in the evening, right? So Friday morning was when I had noticed. So Friday morning was when I noticed that it bounced off this level right here, okay? And it had produced a high higher than this one over here, which effectively for me made this the high point of the week, right? So my analysis moving forward was, if you got a close below the weekly low, which is this level right here, okay, I would then start loading up sales from this level over here, okay? So I was literally thinking, and I was using my brain at this point, right, which I hadn't been doing for a good period for the beginning of that week anyways, right? So we waited, the day went on, and then let's find a good time. It was around mid-morning, roughly mid-morning, 2 in the morning. Let's see, 3, 4, 6. Okay, so I'm just going to put in an estimate guess right here. It could have been higher, or you may have been a little bit lower, but I was around this area somewhere. So I would say I put in a buy around this location over here, right? I put in a buy over here, and then I hopped out at the end of play, at the end of market. It was a little bit lower than when it actually hit going up to the weekly high, so it was a little bit lower. So I took that, and then I left it. Boom. That was that. Okay, so those were my moves for that week. And then week just gone, right, was first week started, and I could see we had a bit of a range. That's what this thingamajig, this level here is for. So we had a bit of a range, and I could see that the range was pretty much going on for the whole of that Monday. So the whole of the Monday we was in a range, right? So I said to myself, okay, cool, we're going to keep it nice and simple, right? What is the risk in this zone right here? How much is this worth to me? What is the damage, right? How much pain am I prepared to take? So I did a little level, worked it out, and it came up to about 98 pips, right? More than I would like, but if I wanted to get in, I had to think about it, okay? And also as well, this area, that weekly high plus this new weekly high plus price was building up at the top, was preparing me for a straightforward sell to the downside. So what I did was, I did nothing on the Monday, okay? And then on the Tuesday, I put in a trade, okay? So I locked in a trade once. Let me zoom in so you can see exactly what I'm talking about. So once price closed below what I had drawn as a range, and bearing in mind, this is not a fixed point. This is just me with past experience in the market, analyzing where, if market goes past a certain level, what I should do and how I should do it, okay? So this was Monday's low. So once Monday's low was broken at this location over here, I knew I should be looking for a sell. So what I did was I didn't take the sell when it came back into the range box, because it could have done anything. It could have literally done anything. All of this could have been a false breakout that would have caught me slipping. So what I did was I waited for an opportunity, and that opportunity came on the Wednesday. So Wednesday morning, right? Wednesday morning, roughly around, say, this level over here. So I'm just going to call it 9 a.m. Yeah, 9 o'clock, right? Because I think I took it about that time anyways, 9 o'clock. No, wait, I was actually on, yeah, I took it about 9 o'clock, because I took it and then I was in a bad spot for a hot minute, right? So I took the sell from this location over here. So I took the sell from here. So that is the 8 o'clock candle in the morning, GMT London, right? My stop was massive, but I had a mental stop, right? So that mental stop was this level right here, right? Ideally, the best stop level would have been up here, covering all of the wicks, okay, right? But my mental stop was over here. I was like, any more than that, then I'm not going to be happy. Literally, it's going to ruin my whole day. So I'll hold this as a potential, as a stop, not potential, as a stop, and let's see what happens. So I loaded it up at that level right there, okay? As the day went on, we saw boom, 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 boom. Price close at this level. At this point, I'm super confident because we have a low below the weekly high, which is this level over here, right? And price is now flying down. So we've got to the end of the Wednesday now, and I need to make a decision. What should I do? Should I literally close the position, or should I keep it running? So what I did was I bought a trailing stop to cover this wick up here, right? To cover this wick over here, this one, right? And see how the day went on. So come Thursday, price is now dancing around this level over here, and then it then closes. It then closes below that Wednesday's low. So then what did I do? I made another mistake, right? So, but bearing in mind, I had already locked in profits at the top, so I was kind of cool. So what I did was I kept my stop exactly where it was. I did not change it, right? My trailing stop, it stayed there. All this profit here is all locked in. And what I did was I then hopped in somewhere around this level. I'll probably say 8 o'clock again in the morning, right? 8 in the morning again. So I loaded it up from about here. I loaded it from about this level right here, right? Let me try and get this dead on, right? So I loaded up from here, right? I was in profits for a little bit, then it went, shook me out, and then obviously it did this over here, right? Produced a higher low, and at this point, overconfidence is now starting to play games with me right now, okay? Because the stop is at the same level as my trading stop up here, right? And I'm saying to myself, it's creating the shape to say it wants to go down. So I was right in that assumption, but what I was wrong was, the area that I was wrong in was how high was it going to go. And what do I mean by it was creating the shape to tell me that it was going to go down? Let me just move this out of the way. I don't know why this thing even appeared there to begin with. Okay, where was I? Okay, cool, here it is. Right, so this was the trend that I had identified. And remember, I always keep saying this in all my previous videos, that this trend basically has a tendency to break downwards, right? So I saw this trend and it gave me that level of confidence. But what I hadn't realized was how high it was going to go. And in doing so, right, I literally got stopped out in all my trades. And then I went back to the books, right? Because I was not happy with the fact that this situation had taken place and I'd missed it. So I went back to say, okay, all right, so how I just typed something random into Google, like how is the best way to kind of figure out when a trend in the market is about to break, etc., etc. And there was all types of concept, you know, if you get higher lows, higher highs, you know, the usual spiel. But there was one that reached out to me, okay, right? And it kind of stuck in my mind. Now, this is from a YouTuber. I think he's the what is that? I think it's ITC. So there's a guy called ITC basically, right? On YouTube right now, okay? And he's got all these concepts for people to become better traders, okay? Some of them are absolutely fantastic, but you really need to know the whole picture before you're actually able to activate them. And there is some of his concept that you can literally take that and apply it to your strategy, okay? So the one that I took to apply to my strategy is the concept known as the fair value gap. The first time I ever heard of this concept was from that guy. It did not come from me. I didn't coin it. He said it, right? And I haven't heard this concept in any books that I have read so far, right? The fair value gap. So I was like, oh, the fair value gap, what's that all about? So obviously I read up on it, and then I started to kind of figure out exactly what's going on. So I'm going to show you a fair value gap right now as to where I actually should have had my stops, which would have meant I would have been in a trade right now, right? So this zone that we're looking at right now is a fair value gap. This area right here is a fair value gap. Let me see if I've got put a label, because I was playing around with this for a fair bit. Yeah, as you can see, we've been playing around with it for a fair bit. Right? We even got the labels for it. So fair value gap on the 1 hour, right? And what we can see here is price pushes up to the fair value and then breaks all the way back down again. So effectively, where I should have had my trading stop, it should have been up here. I should have had it at break even. My the trade that I had, right? And this second trade I should have taken, I should have positioned that over here at the low point of the fair value gap, right? Because what that would have meant was, not only will I still be in the trade right now, okay, with nice profits made, or maybe would have jumped out, either way, right? But it would have given me a nice little situation running down here, right? So these are the concepts that I learned from last week, that I learned from last 2 weeks. Well, last week was where I found out about the fair value gap, in all fairness, right? But and you're going to be hearing a lot more of that in the analysis moving forward, because that concept seems solid to me. There were a number of strategies that he talked about, and in all fairness, it's not workable in terms of how my life is currently is organized, in terms of obviously going into work, trading, etc. I can't be sitting there waiting for the silver bullet hour, etc. when I've got things to actually do in that current moment. So it's not going to work. But the fair value gap, that one, I can take advantage of that at any moment, and I can use that either on a day, on an hour, on the week, on the minutes. Like, it works. Well, I'm not going to say it works all the time, but it's a good area to actually spot a solid support and resistance zone, in my opinion. And once again, I'm not a financial advisor. I'm not giving you financial advice. I'm not telling you this thing's going to work all the time. It's a concept that I've taken on board. I've tried it out. It seems solid, and I want to see if I can find a practical way to integrate that into my overall trading strategy, and hopefully let's see what that develops into. And that information I got from a guy called ITC on YouTube. So you go check him out. He's got all these concepts. You might have the time to activate them all. You might have the time to activate some of them. It's always good to use honesty when you're finding these strategies, because remember, your life, your Monday to Friday, how you do things determines how active or how engaged you can be in the market. So don't go and take a concept that is active at certain periods in the day, and in those days you've actually got things to do. So I would say exercise caution in taking that information, okay, and integrate it. And obviously, the more powerful you get at using what's the word I'm looking for, in trading, the more you'll be able to bring in these finite strategies and concepts into your overall strategy, right? So that will be my advice to you guys moving forward. So with all of that covered for now, okay, so we talked about my 2 weeks trading experience, right? Let's talk about what we're going to do for this week coming, right? So this week commencing the 7th of August. Okay, we'll bring this down a bit. So as you can see right now, as it stands, okay, price is very close to a major level, right? And the level in question is this level right here. which is 15,266.5. So price has visited this zone, it's given it one touch, and it's now touched it again, and it's just above it. Okay, right? This structure that we're seeing right now, okay, can be referred to as, say, a peak formation. You could say that, right? You could say that it's a peak formation. It's definitely is one to trap sellers, right? I mean trap buyers, sorry, right? So that's what we have right here as it stands right now. Okay, now there's two things that I'm waiting for, that I want to see. First things first, is price going to push down lower? In my opinion, I think so, because last week's low has been taken out already. And it's given us a peak formation at this level right here to tell me that price is going to be going lower. Once again, not a financial advisor. I'm not giving you financial advice. It's important you learn how to do these things for yourself. So I think it's going to be going lower. Second is, this is the weekly low right now. So this level is last week's low, right? There's no point drawing another little label in that area, because it's only going to be overtaken by this major one over here. So this level right here is last week's low, right? Now if we get a close below this level over here, okay, so we have 4 possible indicators to tell us that this is a downtrend right now, right? 4 possible indicators. So let me just recap what they are. So first is, we have the weekly high over here, and we have the previous weekly high at this level, and we have last week's weekly high at this level, right? So that is number 3. So we've got 3 levels, all moving downwards, right? And then, okay, we're not going to find anything here. We're just going to use these last 2 weeks, right? And then we have the weekly low that was taken out, last week's low that was taken out this week, right? Or the previous week's low that was taken out this week. That's this over here. It was taken out at this zone right here. Okay, right? We now have the new weekly low. Okay, so if we find price at this level over the course of this week, okay, we now need to find the best possible entries, to join the market, right? Now, before we find the best possible entries to find the market, there is another thing that we also need to keep in mind: the news, right? Not to say we're going to trade the data of the news, but should the news do something stupid, okay, we want to make sure our trade is protected, right? That's what we want to do. So when we're looking for the entries, or when I'm looking for the entries for a potential sell, I want to keep in mind, where are the areas news could send market if it sends it in a direction that is not in my favor? Okay, where it could send it, and am I able to protect myself properly from it? Okay, so one of the things that we talked about earlier on in the video was the concept of the fair value. Okay, so the fair value is perfect, because what it did was, it was tapped by the non-farm payroll news, right? So non-farm payroll came out, right? It came out as normal. It was a sell bias. I mean, if I read it right, or if I remember it right, it was a sell bias, okay? But what happened was, it started to go up first, because there was a number of news in there that was in line with the buy. So those buys were triggered first, and then the sell came after. This is the sell that came after in response to the non-farm payroll, right? So one of the things when I'm looking at the news is, I don't expect market to react immediately to the news. And many traders actually think that it reacts immediately. No, it doesn't. It doesn't. Sometimes what they do is, they will gain the benefits of one news, okay, one news breakage. So say, for example, a report comes out that says, okay, unemployment report, and unemployment report comes out lower, all right? That basically sends the market in an upward trajectory, right? In my opinion, it sends the market up in an upward trajectory, so it sends it up. But the following news, if it has bigger numbers in regards to it being a sell bias, okay, that may come as soon as the news break. But what could happen is, it could activate later on in that day, and that's what we had with non-farm payroll. A whole bunch of buyers, right, got triggered in, right? They took it all the way up, and then it slammed all the way back down again. And this was where their liquidity was sitting, and it hurt them all. So those are the two things that I want to be taking into consideration for the market for next week. Is first off, if I get the actual confirmation to say that market is going to be going down, I want to find a place to actually locate myself. And if I do check it out and I can see there is news coming in on a specific day, I want to start preparing myself. So rather than doing straight market buys in or things like that, I will find a fair value gap location, and then I will park all of my orders sitting in that location. And then should it go in there and trigger it and then drag me down, fantastic. If it doesn't, then obviously it doesn't. It is what it is, right? It is what it is. So with all of that covered, my awesome people from all around the world, I want to thank you for coming over to watch another episode of NAS100 analysis today. I wish you the very best in your trades for this week, right? And make sure you check the description box. There are a few links that you can use to help you along your trading journey. The first being a link to TradingView. So if you don't have TradingView, you can use my link and get yourself set up on that. Okay, I get something, you get something. It's a win-win for both, right? The second one is there's a blog that I've put together, so you can follow the link with some recommended books that have helped me on my trading journey. You can go check out those books too. Okay, see if there's any value for you, or you can just go and check out those books and see if there's value in it for you. All right. Third is there is a link to a broker that I recommend. Okay, it comes with a promo code. Make sure you use that promo code to get set up, and they will look after you. And you're able to trade cryptocurrencies. You're able to trade anything and everything that you want to trade within reason, of course. Okay, right? So you can't do sports. Right, so make sure you do that. So with all of that covered, my awesome people from all around the world, I want to thank you for coming over to watch another episode of NAS100 analysis today, and I look forward to seeing you in the next video, which will be very, very soon. So for now, this is Pips and Points signing out.